Hey everyone, welcome back to Corporate Decoder. Today, ARMP just filed an 8K announcing a new loan agreement, and I am seeing a few things that could really impact their future. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a peek into how Armata Pharmaceuticals is financing its operations, and it involves a significant loan from a major shareholder's subsidiary. So Armata Pharmaceuticals incorporated the company. It just announced a pretty big deal on May 13th, 2026. They got a new credit agreement, which is basically a fancy way of saying they took out a big loan. This filing is a current report, meaning Armata is sharing important news with everyone. The same day it happens, this is a Form 8K, which is used to announce major corporate events. The key date here is May 12th, 2026, which is when they actually entered into this agreement. The company we're looking at is Armata Pharmaceuticals, Incorporated. They are in the healthcare and biotechnology sector and have a market cap of around $296 million, with about 61 employees. Recently, they've been in the news for getting FDA Fast Track designation for their phage therapy, which is a pretty big deal in the drug development world. Their common stock trades under the ticker symbol ARMP on the NYSE American Exchange. It is good to know where the principal executive offices are located, which is in Los Angeles, California. Now let's get to the main event. Item 1.01 talks about entering into a material definitive agreement. This means Armata has signed a contract that is important enough that they have to tell the public about it right away. So on May 12th, Armata signed a credit and security agreement. This is a big loan agreement, and the lender is Innoviva Strategic Opportunities, LLC. What is interesting is that Innoviva is a subsidiary of Innoviva Inc., and Innoviva Inc. is already a major shareholder in Armata. So this loan is coming from a party that already has a significant stake in the company. This agreement is for a term loan facility of $25 million. That is a substantial amount of money. The interest rate on this loan is 14.0% per year. That is quite high, especially when you compare it to typical bank loan rates. This loan is set to mature in January 2029. To make sure they get their money back, Innoviva has secured this loan. This means Armata and its domestic subsidiaries are guaranteeing the repayment, and the loan is backed by almost all of Armata's assets and those of its guarantors. This is a pretty common practice for secured loans, but it highlights the seriousness of the commitment. Like most loan agreements, this one comes with a set of rules and restrictions called covenants. Armata has to follow these rules. They include things like regularly reporting their financial information, and there are limits on how much more debt they can take on, what kind of new investments they can make, and even what kind of dividends they can pay out. There are also specific conditions that would be considered defaults on the loan. These include not making payments on time, breaking any of the rules in the agreement, if the collateral securing the loan gets damaged or lost in some way, if something happens that could really hurt the company's business, or if the company runs into financial trouble or significantly deviates from its planned budget. A material adverse effect, or MAE, is a really important term. It basically means something bad happening that could seriously impact the company's ability to operate or pay back the loan. Next up, we have item 2.02, which is about the company's financial results. Armata also announced their financial results for the first quarter of 2026, which ended on the 31st of March. This information was also shared in that press release we talked about earlier. Then we have item 2.03, which covers new financial obligations. Since the loan we just discussed is a direct financial obligation, it falls under this section. The filing simply states that the information provided in item 1.01 is incorporated here, meaning all the details about the $25 million loan are relevant to this section as well. It confirms that this loan is a new significant financial commitment for Armata. Item 7.01 deals with Regulation FD disclosures. This regulation means that companies have to make sure that any material information they share with investors is made public, not just to a select few. This section confirms that the press release issued on May 13th was used to disclose the information about the loan agreement as required by Regulation FD. So everything we've covered so far about the loan was officially announced to the public through this press release. Finally, item 9.01 lists the exhibits that are part of this filing. These exhibits are the actual documents that support the information in the report. Exhibit 10.1 is the actual credit and security agreement from May 12th, 2026. This is the full legal document outlining the terms of the $25 million loan. Exhibit 99.1 is the press release dated May 13th, 2026. This is the public announcement that summarizes the key points of the agreement. And Exhibit 104 is the cover page in an interactive data file format. This is more for regulatory tracking and filings. The report is signed on May 13th, 2026 by David House, Senior Vice President of Finance and Principal Financial Officer for Armata Pharmaceuticals. Incorporated. This shows official approval of the filing. Now, looking at this filing, the most significant piece of information is that $25 million loan at a 14% interest rate from a related party, Innoviva. This interest rate is quite high, suggesting that perhaps Armata is seen as a higher risk borrower, or maybe Innoviva is looking for a good return on their investment through interest payments. Given that Innoviva is already a substantial shareholder, this could be a strategic move to support their existing investment while also earning a significant return. The fact that the loan is secured by substantially all of the company's assets means that if Armata struggles to repay, Innoviva has a strong claim on their physical and intellectual property. This is a high-stakes situation for Armata. Recent news also shows that Armata's stock has seen some volatility, with a big surge in October of last year, but also missing earnings estimates in their latest Q1 2026 report. This new loan could provide needed capital, but the high interest rate and security provisions are definitely things to watch. The risk I am watching is whether Armata can generate enough revenue and profit growth to comfortably service this $25 million loan at a 14% interest rate, especially given its current market cap of around $296 million and a relatively small employee base. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. If you found this breakdown helpful, please like and subscribe, and join our Discord community for more.